What's up, people? So today I want to go over the basics of building your credit, and basically the steps are very easy. Number one, you get lines of credit. Number two, you pay things off, and number three, you do that for years and years. But the in depth is quite a bit more complicated, and so number one, you need to pay everything on time. And by that, I mean everything that reports to credit bureaus. You should obviously do that with everything. And if you incur some short term debt just to pay off things on time, you should generally go for that. You save so much money by paying things on time, it's ridiculous. So, anytime you have a late payment on a credit card, they charge you like $35. Anytime you get into the negative on your bank account, they charge you like $35. It can even get more expensive than that. But making minimum payments on a credit card on time will save you so much money. You're saving the $35 that you would have spent, and anything that you pay late will hurt your credit. You do have a grace period of usually about 30 days. So if you pay things 29 days late, you generally don't get a hit to your credit. So if you're ever in a position where you really have to pay something late and there's literally no other way, still try to stay within the 30-day window. That is going to help your credit a lot. Paying things right on time will help you with money, not necessarily the credit. Paying things within 30 days of when it's due will help you with the credit a lot. So always do that no matter what, basically. There's exceptions to everything. But, you need to have different forms of credit, which means if you have a credit card and nothing else ever, then you will build your credit slowly to a certain point. It will never reach, the 760 level. And to go back to the basics credit score is somewhere between 300 and 850. And I have never seen anyone have over 800. I have seen people at 300, and mine was actually 0 4 years ago. So before you have anything that ever reported to a credit bureau, then your credit is 0. It doesn't matter how much money you have. It doesn't matter what your income is. You could be living in a mansion on a beachfront property with $1 billion in the bank. If you never had any credit card or car loan or mortgage or anything, your credit is going to be 0. So you need to have lines of credit, and you need to have them open for a long time to eventually build that credit. And you want to have different forms of credit to build it faster, but it's not entirely necessary. So you don't need to get a car loan if you can't get a good interest rate on that. You don't need to get an unsecured loan to, basically just pay interest to the bank if you don't need it. And obviously you're not going to get a mortgage if you're not really interested in buying a house. But generally, the more different forms of credit you have, the faster your credit is going to go up. You need to get a good credit card. Generally something that pays you every time you use it. So one of the best credit cards for that is the Citibank, the double cash card. A lot of people are recommending that. So that one pays you 1% every time you make a purchase, and it pays you another percent every time you pay it off. So on everything you buy, you save 2%. That does add up over time, and if you don't care about that, then first of all, why are you on this channel? Second of all, it still pays to have a credit card and to have it open for a long time, because the age of credit really impacts how high your credit can go. It's not the most important thing for a credit report, but it's one of the main things. I think it's 15% of the credit report is based on how long you have had credit. So number 4, you need to hit the like button. That helps tremendously. And then you need to pay down the credit cards. So if you have credit cards, the lower the amount compared to the available credit is, the better your credit. So if you have a credit line of $1,000 and you have a balance of $1,000, then that is equivalent for the credit agency of having a credit card with $25,000 and a balance of $25,000. So the balance in itself does not matter. The limit in itself does not matter. Just the relationship between those two. And you should generally stay below 30% of the available credit. The best is to stay between 0 and 10% of the available credit. So if you have $1,000 credit line, you should really stay below $300, and you want to stay below $100. And obviously, if you have a credit line of $100,000, you want to stay under $30,000, and you want to stay under $10,000. But that's kind of the thing. So anytime your credit limit increases, your credit score goes up. When you get a new credit card, your credit score goes down slightly while you have the new credit card on there, because you asked for more debt, basically. So that very short-term thing of getting a new credit card where your credit goes down is balanced out and then some by having increased credit limits and a lower balance to available credit ratio. So if you have $1,000 limit and $1,000 balance, and then you get a credit card for a $100,000 limit with the same balance, your credit goes up significantly. So you want to pay down the credit cards until they're under 30%, and ideally under 10%. That will give you the best credit report. And the last thing is, keep old accounts open. So let's say you have to get a first credit card, and it's a terrible card with no rewards, with a $500 credit limit or $200 credit limit or whatever. If you don't have yearly payments on that credit card, so if it doesn't cost you anything to keep the credit card, you should keep it open as long as you possibly can, because the age of credit is one of the more important things on your credit report. So I at this point have 11 credit cards, and my oldest one has a $500 limit, no rewards, haven't used it in a long time. You should periodically use it and pay off the balance just so they don't close your account. But essentially just keep it around, keep it open, keep it in good standing, and make sure that the age of your credit keeps going up. And the last thing is, keep doing it. So while you just keep making payments on your credit card, keep everything open, pay everything on time, all the factors in your credit report keep getting better and better. So the average age obviously keeps going up by about a month every month, shockingly enough. So just keep doing everything. Just, over time, your credit is going to improve. The best or the longest that your credit report basically cares for is about 7 years. So if you do everything perfectly, and you have 10 credit cards, you have a car payment, you have a mortgage payment, you have an unsecured loan, you have basically everything, and you pay everything on time, you have your balances under 30%, or you have your balances under 10%, and then you don't get any new credit inquiries because you don't apply for any new credit, then you just wait basically 7 years, and that is the best score you can ever have. So just do all that, do it for 7 years, enjoy having good credit and getting all the rewards from the credit cards, getting really low interest rates on loans and mortgage and car payments and everything, and just enjoy life.